Fitch's Fixed Interest podcast delivers the analyst insights and updates you need to stay ahead in a rapidly evolving market.
Welcome to this edition of Fixed Interests on the US Consumer Health Pulse. My name is Rachel Willis Gutierrez, and I'm a Senior Director in Fitch's Investor Development team. And I'm joined today by Olu Sonola, who is our Head of US Economics. Welcome, Olu.
Thank you, Rachel.
Okay, Olu, let's start by setting the scene. The US consumer plays such a significant role in the overall health of the US economy, and we are seeing signs to suggest overall spending is slowing down. What are the key factors at play here?
There are clear signs that we're seeing a slowdown in U.S. consumer spending. When you look at the first half of this year, overall spending growth was about 1.8%, compared to about 2.7% during the last half of 2025. That's clearly a slowdown. The main factor that I would point to now is what has happened in the Middle East and how that trickled down has extended to energy prices. We've seen somewhat of an energy shock, and inflation generally is higher. So with consumers contending with much higher prices, it's not a surprise that you're seeing a little bit of a slowdown on the US consumer spending front.
Yeah, it makes sense. So the spending is one of the variables that fits into our quarterly US Consumer Health Pulse Index, which is something that Fitch has started. And I was wondering if you could briefly explain how the rest of this is kind of put together and what overall it signifies.
So there are many angles to this, to the US consumer. What we've tried to do with the health pulse is look at those different components. So definitely spending, we're looking at employment, we're looking at income, we're looking at the balance sheet, and we're also looking at overall sentiment. So we put all of that together to create what we're calling a health pulse. And when you actually look at that trend going back to 1980, it shows a consumer that continues to hang in there. It shows a relatively resilient consumer. And that's the narrative that we expect. That's the scenario that we expect over the course of 2026.
Okay, that's interesting. And we touched on obviously spending and maybe looking across the other variables that kind of feed into that index. Perhaps a few words on income, because that's obviously going to impact spending.
Yeah, income is the most important when it comes to spending because spending is really a function of income. If you don't have a job, if you don't have money coming in, it's very likely that your spending patterns will be challenged. Real income growth has been flat to declining because of the surge in inflation. And anytime you see that, what typically happens is that spending growth too would respond in more or less the same way. Over the course of the year, that's exactly what we've been seeing with real income growth moving lower. Spending has been relatively challenged. But to be clear, it's not falling off the map. It still remains resilient because consumers are dipping into savings and consumers are actually hanging in there.
Now, I wanted to also to touch on like the balance sheet. We talked about that as well as a variable of the index, the assets and liabilities. Can you maybe just say a few words on that?
The balance sheet has been the bright spot, and that's not a surprise because stock market returns have been good. It's up about 20% over the last year. And, when you think about the K-shaped economy that we broadly talk about, anytime you have very robust returns in the equity markets, it's more than likely that people that have exposure to the financial markets spend more. We call it the wealth effect. And generally, there are signs that that's in play. It's not very overwhelming, but there are a few signs here and there. The liability side has also been okay in aggregate. I emphasize the word aggregate because there are clearly pockets of weakness. I think lower income consumers are somewhat challenged because they're bearing the brunt of inflation. But all in all, that aggregate picture still remains relatively healthy.
So maybe just to close out, perhaps we could talk about the kind of overall consumer sentiment.
Sentiment is how consumers are feeling, and they've not been feeling good just because prices have been high. But the good news for spending is that even though consumers have not been feeling good, they've continued to spend. So that has been the hallmark of this era or this time frame when you're thinking about consumer spending as a whole. Consumers are not happy with where prices are, but they continue to spend, largely because the labor market is still quite good. They have a job, there's income there, And anytime you have income, consumers will spend. Or you may just see a little bit more of a constraint in terms of spending growth, but they will continue to spend.
Thanks, Ulos. Thanks for your insight. And if you would like to know more about the US consumer, you can see the reports on the Fitch Ratings website. Thanks for listening.
Thank you for having me.
Subscribe to Fixed Interests wherever you get your podcasts.